I'm Andy and welcome to my channel about crypto. In today's video, I want to talk about one of the most important things when it comes to investing in crypto, maybe even the most important thing, which is your strategy, or finding out, realizing what kind of trader or investor are you, and basically adjusting your strategy to your personality and also to your goals. Because I think one of the most common mistakes when it comes to investing in crypto is not having a plan. So basically you get into it with an idea of making some money. But then if you don't have a clear plan of how you want to achieve it or what exactly is your end goal in terms of profits, it's really easy to just keep jumping onto the next new shiny thing. And most likely you will very quickly blow your capital and end up with very little money left. And I think it's especially common in the crypto space because there's just so much going on. And if you are quite new to this space, and I certainly made this mistake myself, you start maybe with one idea that, oh, I'll just buy some Bitcoin and leave it and that will be it. But then you start exploring the space a bit more and you start finding out about all those altcoins or NFTs or other stuff and people making huge amounts of money on it in a relatively short period of time. So of course you get interested in it and you start getting into this area. And then, well, it's very easy to essentially just, if you don't have a plan, go completely different route than what you originally planned. And without the plan, well, most likely you will lose your assets. So in this video, I will talk about a few different approaches. And then you just sort of have to figure out for yourself, well, what's the best approach for you, for your own risk tolerance, for the amount of time you want to spend on it, and well, your level of interest in crypto, if that makes sense. And of course, it's also absolutely fine to change your strategy over time because you may realize that actually as your knowledge increases, you want to try different stuff. But again, it's important to have that plan. As always, if you do like this content, if you find this helpful, please hit the like button, subscribe to the channel. You can also check out my private Discord and my course, Crypto Like a Pro. I'll put the link in the description. Okay, so what are the different types of investors or what are different investment models? I will use myself here as an example. So when I first got into crypto in 2017, I bought some Bitcoin, ETH, and Ripple. And my goal at the time was to put a bit of money in and then just hold it for years without any particular plan of what I will do with it in the future or without any particular goal, how much I want it to be worth in the future. I just wanted to be in the game. I knew that there was something in crypto. And yeah, basically that was it. Buy some stuff, have it somewhere secure and wait. And that's very good strategy, especially if you're quite new to crypto, because you don't then have to keep checking the prices all the time. You have to make sure that you invest in assets which are relatively secure as far as the crypto space is concerned. So in terms of various tokens, that would be Bitcoin and ETH. In theory, all that top 10, top 20 tokens should be pretty secure, but we've seen this recently with something like, let's say, Terra Luna. Nothing is ever guaranteed. Well, nothing is ever guaranteed in investing in general, but when it comes to the crypto space, Bitcoin and ETH should be the most secure investments, even if not 100% safe. So yeah, that's one strategy. Put the money in and then hold it long term. Takes a lot of stress from the equation because you don't have to keep looking at the price of Bitcoin. If we look at the chart of Bitcoin here from its beginning, you can see that of course we have those massive spikes and dumps over time. And by the way, this is last market cycle, so from late 2020 until now. This spike here, that was 2017. And before that, well, this tiny bump here, that was 2013 market cycle. So although there are those huge peaks and dumps in every cycle, and although Bitcoin is now, well, down quite substantially from its market peak of just shy of 70,000, at the same time, if you look at the long-term trend, so in this case is the 200-week moving average, the green line on the chart here. So 200-week moving average is basically an average price of Bitcoin over the last approximately 4 years, 200 weeks. You can see that this line actually with time always keeps going up. Sometimes it may be almost flat. Sometimes it's going up much faster. Currently it's slowing down because of course we are in this downtrend, but the overall idea is that, well, if you buy some Bitcoin and you hold it for any 4-year period or longer, you must be in profit. Basically, over any 4-year period since the beginning of Bitcoin, the price always kept going up. If you hold it for less than that, of course, well, you may be in profit, you may be in loss. It depends where you bought and when you're planning to sell. It's similar with ETH, although ETH is much younger and more volatile. And then with other cryptocurrencies, because they have lower market cap, of course, they're even more volatile, and that not necessarily is true. So here is one element. If you're planning to just hold long term, I would stick to Bitcoin and ETH because they are secure. You cannot really buy low cap altcoin and expect that, oh, it's a good hodl investment that you can just hold forever. No, it may dump, and actually usually they do dump in bear markets really quite badly, and there is no guarantee that they will recover in the next market cycle. So this then takes me on to the next strategy, which is trading. And these could be very short time frames, like 15 minutes, an hour, or 4 hours, or it could be over a period of few days, maybe few weeks tops. So then the difference is that basically you're trying to take advantage of those peaks and dumps. And of course, sometimes a lot of it is happening in one day. If we look at the chart, whenever we have, that would be a good example here. So the body of the candle is where the price was at the beginning and at the end of the day. If it's red, it means that we closed lower than we opened on that particular day. If it's green, it means that we closed higher than we opened on that particular day. And then we have those wicks below and above the candle. So these are the minimum and maximum prices that particular asset achieved in that day. So for example, if we look at this particular candle here, we can see that the Bitcoin opened at approximately 53,000, 53.7. The highest price was just a tiny bit above it because we have this tiny wick above. It closed at around 49,000, but there was a point during the day when it dumped as low as around 41,000. So of course you could attempt to trade this movement, take the advantage of the volatility and try to make some money on much shorter time frames. But you cannot really expect to do this successfully unless you spend a lot of time practicing it, tracking the changes in prices, observing patterns, learning about this, tracking the news and so on. You cannot just sort of randomly, or there are very rare situations where you can just randomly try to do a day trade and come out successfully. And also you have to be prepared that you will lose on a lot of those trades. So you never trade your whole portfolio. You do it in much smaller chunks. It's a completely different strategy. And then somewhere in between, there is trading as people often do with altcoins, small cap altcoins, where you buy into a project with a hope to sell it in a few days or a few weeks, because you know that there will be a project coming out, finished product, or they're working towards a certain milestone, and you expect that as they reach this milestone, the price will go up, or it will go up just before and then correct a little bit. Or you're just purely speculating and you're expecting that, certain influencer will be talking about this product which will drive the price up. But in case of such small market cap projects, you have to trade them on relatively short time frames. Days, maybe weeks, maybe a couple of months here and there, but you cannot really expect that you will buy into a project like this and it will continue going up in value over the next, 3, 5, 10 years. It may, if it's really successful and if the team continues working on it, but a lot of them will fail, unfortunately, as it's true with many other companies and many other projects. And then, of course, unlike Bitcoin and ETH, which so far they always prove that even if the price goes down significantly, eventually it goes back up and goes back up much higher than before. Those other projects, the price may go down and then the project may just completely collapse. So as you can see, we have here 3 completely different approaches. You either buy and hold long term, and then pretty much you just completely ignore whatever is the daily price movement. It just all becomes noise because, over a longer period of time, as I was showing you with 200-week SMA, the value will just continue going up. Or you go into day trading and, you will have to spend a lot of time learning about it and practicing. And please do first practice on paper, in theory, rather than with your actual money, because there is very, very good chance that without a plan, it's almost guaranteed that without a plan, you will lose your money. But if you spend time learning about it and practicing and you stay sensible, there are, of course, huge opportunities there to make a lot of money. Or you go somewhere in between. You invest in smaller cap projects and then expect to make some money in a time frame of days or weeks. You have to bear in mind that this also has to go in line with a particular point in the market cycle. So currently we are in a bear market. Prices are down a lot from their all-time highs. And right now, I think investing in anything other than Bitcoin and ETH is extremely risky because we don't know what will happen in the market next. If the prices will start going up, as in Bitcoin will lead the rally and the price of Bitcoin will start going up, of course, altcoins will start going up as well. But if the price of Bitcoin goes down, and if we look at this current stage of the market cycle, we had market peak here, then the prices went down, then we had a bit of a move up here, then we crashed, then again a bit of a move up, and then another big crash. We are now moving up again, but there's nothing to say that we won't have another similar crash as we had here or here, right? We may well continue going up, that's entirely possible, but there may be another correction to something like, let's say, 15K or so. And if that happens, then altcoins will get absolutely slaughtered. That's why right now investing in altcoins is not a particularly good strategy, especially that you do it on shorter time frames. You should wait with it until the market is clearly recovering, until we are in a phase like this one here or here. Because what will happen then is that Bitcoin will always lead the rally. The price of Bitcoin will go up first, then usually ETH goes up second, although now with ETH 2.0 coming out, this may slightly change it. And then altcoins start going up. And then finally, I just want to mention one other scenario, which is something I've done quite a lot in the last year. And that's basically just putting some of your assets at risk to learn, to explore. So I don't know, maybe you initially got into Bitcoin, put some money in, held it long term, but then you decide that actually as you start learning more and more about the crypto space and Web3 in general, you want to explore other options. You want to try out some DeFi protocols. You want to buy some NFTs and so on. And there is a possibility that if you want to do it all in practice rather than just read up about it, you may lose some money, but that's just part of a learning process. Learning, especially learning in practice, usually will cost you something in one way or another. So I don't think there's anything wrong with it, but it's just important, again, to be honest with yourself about, what is your plan here? And if in some cases, you maybe will make some money on some of those projects. In other cases, maybe you will lose some money, but you will learn something. And basically you're just accepting that this is part of the learning process and there is a cost attached to it. So again, it's not trading or investing strategy as such, but just something worth taking into consideration because it's likely to happen at some point in your journey in Web3. So I hope that was all helpful. I think there are no right or wrong answers here, but I think it's really important to ask yourself those questions. What kind of investor are you? What kind of trader are you? What's your plan here? How you want to do it? Because also, depending on how you're planning to use your money, you will need to find different resources. There's no point following, influencers who are talking only about long-term holding. If all you want to do is day trading or trading small cap altcoins, you will need different sources of information. Ideally, I think it's best to have both and to get a bit more balanced opinion on the market. But sometimes, depending on the approach, you will be getting two completely conflicting points of view, because one person will be talking about their approach on shorter time frame, where another person is talking about their approach with the long term in mind. So again, this is something really important to be aware of when you're listening to various influencers or various content online. What is the background of the person? What is their goal in terms of how they invest their money, how they trade? Because that approach, that background then influences what or how they're talking about certain assets. I hope this all makes sense. So if you still have any questions, please pop them down in the comment section. I'm more than happy to answer them, or join my Discord. The link is in the description. If you would like to learn more about crypto and more explore the Web3 space more, please feel free to check out my course, Crypto Like a Pro. Again, the link is in the description. And otherwise, well, thank you for watching, and I will see you next time. Bye.